Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, April the 16th. Let's check out who's here. Tommy. Drop like before stream starts. Love it. Thanks, Tommy. Good stuff. Welcome, everyone. All right. So we have. Good morning, Sam. Hey, Sam, I haven't spoken to you in a while. How's it going over there? For those who are watching, Sam, so you're in the loop, is over in northern Italy, hit very, very hard by the coronavirus. How you doing? And your family, of course. I'll wait for your answer and I'll come back to you. There's a lag between when I speak and when you're able to reply. All right. So yesterday we had retail sales, which came out, and abysmal. Back to Sam for a second. I will endure, but it's hard. Many blessings, my friend. I seen the cases drop. Are things improving net, or still the same? Because we're about where you were about a month ago. Really, you're still locked down. Is that a fact? We're having all sorts of mayhem here in the States because people are starting to freak out about being locked down. Interesting. I'm sorry to hear that, Sam. We're in the same spot you were a month ago, so many prayers. All right. Yeah. Good morning, John. Thanks for joining. Okay. Um, Yesterday we had retail sales which came out, and they weren't just bad; they were abysmal. The median expectation was for a drop of 7.1% versus a prior read of spot 4%. What do we get? A drop of 8.7%. Thank you, Sam. I mean, this is just absolutely horrible economic data. The Empire State Manufacturing Index, that's for New York, a drop of, it was already bad. The prior read was 21.5. Actual was 78.2 in the negative. Industrial production, major drop. I mean, just absolutely horrible. But that being said, the markets are up. And it looks as though, even though we have more economic data coming out today, remember, it was a week ago today where we had the Federal Reserve come out and give a helping hand to the markets by throwing out another $2.3 trillion worth of debt. We have that coming out at 8:30 a.m. Eastern Standard Time. More stimulus. So the markets just simply ignore it. We're up over a third of a percentage point. We were dropping yesterday afternoon, and all day yesterday, I should say. And we didn't go adding to shorts. We remained short of the market. What we did do yesterday is we began to take some longs off the table, meaning uh, longs in silver, longs in the miners. We took much of it off the table. And the reason was when we woke up yesterday and we saw the stock market futures down, what we didn't see were silver up. they were trading in tandem. So there was no safe haven play there like I wanted. And as we dropped, I figured, you know what? I'm seeing weakness across the board here. Am I not too heavy to the long side with silver, the miners? And the answer I'm hoping was yes. And we're going to look to get long yet again of these names. But I'm worried about stagflation. Not stagflation, I'm sorry, excuse me. I'm worried about deflation. I think that we're going to have a prolonged period of deflation, and that will probably keep a lid on silver prices, gold prices, and assets that should do well in an inflationary environment for a period longer than I had initially expected. So we made nice money. We did very, very well. Very well. We bought silver way down here near the lows when the gold silver ratio was 122, which has come in somewhat. It's still elevated. We bought a lot of the USLV and we booked those profits yesterday. So a very nice trade. I'm still bullish longer term, but again, I'm worried about a short-term bout of deflation because nobody's spending. And if they're spending it on the essentials. John, second wave of COVID-19 is hitting Japan now. Very sorry to hear. And I think that's one of the major concerns that is frustrating some of the markets at current. And let's face it, nobody really wants to talk about it, but it's a concern here as well. Sam, I have friends in Africa, Philippines, Germany, everywhere. It's the same, yeah. Frankly, I'll share an opinion here. I think that this was perhaps not intentional, but I think this is a weapon. I think this was weaponized more and more, and I think that in hindsight we'll be looking at, and I've mentioned this before. I don't want to be a conspiracy theorist whatsoever, but I think that in hindsight, once we get through this, we're going to be looking long and hard as a country and the globe at China and the possibility that there will be retaliation. So we'll be looking to reshort China using YANG. But right now, it's just in the consolidation range, and I don't want to go buying it back just yet, especially with your economy opening up, supposedly opening up. So we'll see. But those are my thoughts, and more to come on this moving forward, especially as we see the light of day here in the States. We'll be looking to reopen short positions. Let's get back to the charts. All right, so the futures gaining a bit of steam, and we have, this is a 4-hour chart. These are all going to be 4-hour charts. We have recaptured a support level here. The key is, how do we respond to today's unemployment data? And that's the big question. John, I read that the virus was manufactured in a lab in China. And there are ways to divine whether or not that's fact-based or not. And I think that's going to be a conversation for the future, no doubt. And frankly, I hope I'm wrong. I really hope I'm wrong. I hope that, because it could lead to bad things for everyone. I want to be wrong. All right, let's take a look at silver, which we closed out, and we are inching up here. We've recaptured support. The question is, do we fade? Or does this now become resistance? And that's the big question. So I want to re-enter the silver trade. I don't want to chase it if I'm wrong. But we did form a nice base here. So we'll see how it plays out. And we'll be watching tonight, folks. For those who are just joining and for those who are aware, we will be doing Thursday night stock charts live this evening. And that's where we review the health of the overall markets on a weekly basis. Right now, all you're looking at are the 4-hour charts and how we're poised to open up in the morning. So tonight, what we're going to do is at 6 p.m. Eastern Standard Time, what we're going to do is we're going to take a look at the charts on a weekly basis. How do we appear poised to close out the week? And a lot can happen between the closing price on Thursday evening and Friday. So it's really interesting in hindsight to see just how much the market's changed on a Friday. But we'll get a good idea this evening as to whether or not it was wise to close out the silver trade on a weekly perspective, on a weekly time frame. And we'll take a look at the overall markets, the major indexes, and we'll get a feel for how we want to position for next week. So please join us again, 6 p.m. Eastern Standard Time. Love to have you. All right, so that's silver. Let's take a look at the Russell 2000. Hit hard yesterday. Up this morning, again, by about a little more than a third. We're off the highs of the session. And the question is, how do markets behave after today's employment numbers? Think about this. Last week we had a higher than expected number. What if we get a lower than expected number? What if and I'm going to put this in air quotes, I'm trying to be a bit tongue in cheek, but what if we only have 2 or 3 million people laid off today? And I'm using the word only in air quotes. What if we only have 2 or 3 million people laid off? Does the market view that as a better than expected read? And do we rally on that number? Something to think about. While it may be jaw-dropping for the rest of us, the markets just may take it and run and push people up higher. RL, good morning. They ignored last 3 weeks of unemployment data. Yeah, they did. And they ignored, well, yes, last week you had to point the finger at the Federal Reserve. And they came out at the same time that number was released. So they really manipulated the market. And I'm not going to put it past them today to do the same thing or have some sort of manipulation through, I don't know how they'll do it, but it'll be some real sorts of cutesy thing they do. But yesterday we had the big banks. They reported, and the day before, markets rallied huge. Yesterday you had J.P. Morgan announce. Look at this reversal bar yesterday. Who else reported? Citi. They were down. JP Morgan the day prior. You would think that the markets would have taken a lot harder than what they have over these past couple of days. Yet, the markets are up this morning. Blockchain. Hey, good morning, blockchain. No longer free market. Unfortunately, you have a point there. It's no doubt scary. I mean, one of the reasons why I am concerned about shorting indexes nowadays is that, and I brought up earlier last week, and the Federal Reserve's intervention. One of the reasons why I'm worried about shorting the indexes is that I'm worried about one day we wake up where we're limit down on the markets, and what do we get? Some alert coming out of the Federal Reserve that they're going to be buying, the trip queues or spiders or what have you. And at that point in time, I think shorting is dead at that point, unless, of course, you're shorting individual names. It's scary. I think they've gone way too far with this stimulus. I think we've jumped the shark, but I digress here. Let's take a look at some of the other indexes. I want to take a look at bonds. We saw a breakout yesterday on the TLT. This is a 10-year Treasury bond. And we're down this morning, but still a healthy chart. So the Fed still in there buying up debt. They will be the number one buyer of treasuries versus the globe in 2020. Let's take a look at gold. And I want to take a look at Bitcoin as well. I haven't looked at that. Gold is up around $15 this morning. So it's going to be interesting to see, do we hold these gains? Or do we fade? So what I want to do here is I want to keep an eye on this lower band of support. And in fact, what I want to do is I want to create an alert. Now, I'm not going to go shorting gold because I want to buy the miners back. We still have a position in the miners, and I do want to buy that position back. So I just want to be notified of when they do in fact break to track them. And we'll set an alert for a breakout as well on a 4-hour basis. And there we go. Set it and forget it. Let's take a look at Russell. We already did. Copper. What's happening with copper? Copper is behaving well. Looks like we bottomed out on the 18th of last month, and we're moving up higher here. This is an industrial metal. We were in a consolidation the last time I discussed this, and we have broken out. Interesting. Let's check out oil. We're always looking for signals that we're wrong, as well as being right. You know, are we wrong about being overly pessimistic about the global economy? Maybe. We don't want to buy our own BS. And then look extremely foolish in hindsight. So let's validate constantly our opinion. Usually I have these ready, folks. I'm really sorry. Here we go. Now, oil is up today, but no breakout. And we did rally a bit yesterday off the lows. But you can see we have resistance above. We're back above $20 the barrel. But I wouldn't get long of oil until we begin to break out. And we're nowhere near those levels yet. So what do we want to do here? Let's do this. Let's edit this. And all we're doing right now is just setting up support and resistance levels that must either be rallied through or broken down for us to take action. Right now, all we're doing is we're seeing a consolidation. We could say that volatility is dropping off and we're trading sideways, we're getting ready for a breakout. Or I could point out that it appears as though we're setting up for a head and shoulders setup after a double top. Here's the left side of your head and shoulders setup. Head, right shoulder. Here's your neckline. The question is, do we break? You know, more often than not nowadays, you don't see a break on the head and shoulders setups because people figured it out. And you have programs out there that sense these things, and they watch people get prepared for a head and shoulders break by getting short the market or an index, whatever, and only to disappoint people by breaking out. So we don't want to react here. All we're going to do is watch, see whether or not we break out, and bide our time. So oil is not validating any type of thought I have about potentially being wrong about the global economy being stronger than what I expect. Let's take a look at or what that I believe, I should say, the Nasdaq. We're still holding the support level. We are up over a half percentage point this morning. So are we setting up for a break here? And are we putting in a double top? We don't know. Nothing to do but wait. But if we begin breaking down below support here, we will be looking to add to our shorts. And some may view this as a divergence. It's not a divergence on RSI. We haven't broken out yet to new higher highs. So we'll see whether or not we get a breakout on RSI if, in fact, we do break out on the Nasdaq. I'm not going to be the least bit surprised. I think what they're going to do here is they're going to keep this market going through Amazon earnings. And that doesn't necessarily mean we're going to break out to highs versus last week. But I think they're going to try to hold in there and keep this market alive to try to get the big balance sheet names out there. Microsoft, not that Amazon's a big balance sheet. Get those names out there reporting earnings and try to get people excited, keeping the market up. Because we're not seeing the selling pressure despite all the horrible, horrible economic data that was released yesterday. The bank earnings, it's just not reacting. It's as if we're back in early February and we saw China close down. And I was on, you can go back, check the early February videos, and I was saying there's a supply chain shock and we're going to all-time highs. There's something wrong here. Traders are ignoring horrific things. And sure enough, it panned out to be accurate, unfortunately. Palladium, very, very strong here. An inverted head and shoulders setup. Let's pull back here. You can see this. Here's your left shoulder, right shoulder. Neckline has been forming. A very interesting chart and one that could be bought on a breakout. You're seeing RSI diverge here, but that's to be expected. We've been consolidating, so I wouldn't read too much into this. We'll watch Palladium. Let's take a look at Platinum. Similar to Palladium. Had a beautiful run here earlier in the week. Now we're consolidating gains. It's holding those gains. We're probably going higher. Nat gas. A run earlier in the month. We're pulling back. The question is, what was resistance here? Is this now support? And do we begin to break out? So here's our upper band of resistance. We'll be watching nat gas and possibly getting long of the UGAZ in the coming days. That's a leveraged ETF, putting you long of nat gas. And if you don't want the volatility, that's fine. Just look at UNG. And today is nat gas inventories. So those who are thinking about getting long in nat gas, just be careful. That comes out 10:30 a.m. Eastern Standard Time. And that's a weekly report. Now, what we're watching for, and I'm going to go over this tonight as well, is a short of the banks. They are all bringing up their loan loss reserves dramatically. This is the XLF. And I think that prior to tech going, the banks are going to pull back first. And we'll be looking. This is a weekly chart. And you can see we have not put in a new weekly high this week. That could all change for all I know. It's asking a lot for the index to rally and recapture all of these losses on the week. But it's highly doubtful. And we'll be looking to use the FAZ. This is a leveraged ETF putting you short the banks. We'll be looking to buy the FAZ and shorting the banks. So more to come on this. And yes, I will be sending out an alert to members when we do enter and exit the trade. I'm not ready to do it yet. I need to see how we close out the week. So more to come here. I'm just not ready yet. We're kind of in never, never land on this chart, this weekly chart of the FAZ. Let's take a quick peek at the 4-hour chart. You can see how we popped up yesterday, but we haven't broken out. It's a reaction to the banks. We need to see whether or not we're able to gain traction. So I'm not seeing a catalyst thus far to get short the banks, other than the news that they've been releasing. So more to come on this. Paper Chaser, how are you, sir? Well, welcome. Mr. C, love it. Trent, good morning. I'm in the same camp as you, Trent. I think we're gonna. There's a big fight in front of us here, and the Federal Reserve. Unfortunately, I think we're gonna wake up one day and they're gonna be in here buying ETFs, and that is no bueno. All right, let's take a couple of symbols, and while I'm waiting for a couple of symbols to come across, I'm going to go over. Let's take a look at home construction. This is an area that we're looking to short as well. And you can see here how we've rallied on the month up and into that 50-period moving average. And we're backing off. And we're now over the hump of the halfway mark. I'm in shock that they're up on the month, to be honest with you. Let's take a look at a weekly view. Yeah, this is a nightmare. An inside week. And I think we're going to roll over on these Stokes and RSI. So this is another sector that we're looking to short, is unfortunately U.S. home construction. Let's take a look at biotechs, LABU. How are we holding up here? Yeah, it looks like we're running out of steam. We've hit resistance. You got it, John. We'll see how we close out the week. And again, for those who are just joining, please join us tonight, 6 p.m. Eastern Standard Time, as we go over the weekly charts. And we see how we're poised to close out the week. So LABU under considerable pressure. Doji formation yesterday. Okay. 3062 is stiff resistance, 27 spot 01 support. So biotech's coming under pressure. Thanks, Sam. Yes, please hit that like button, please. Let's take a look at EQT. Nice chart. Very nice. Energy. Really? I'm in shock. Really outperforming its peers here. Hey, good morning, Jedi. $1.39. God damn. We're still well over $2 here in New York. It's ridiculous. And I have an old classic that I have. It's an 88 Mercedes Roadster, the 560 SL, and you can't put anything else but premium in that car. And premium, here's the rub. You're not allowed to self-serve in my town. So they charge you an extra 10, 20 cents per gallon, and the guy won't even come out and fill up your car. But they don't drop the price because he's worried about getting coronavirus. He won't touch the handle. You have to do it. So if they force you to pump your own gas, they charge you for it, though. All right. So EQT monthly chart. This is an amazing chart. It's beautiful. The concern I have is, do we hold support here, or do we fade? So what is that number? What's the magic number here? $12.79 per share. We need to hold that level. If we fail to hold it, I would avoid the trade, or I would look to book profits. But if we hold it, I would look for a retest of support next month and possibly add to it. I mean, really nice chart. Very strong. You're right at resistance here at 1301. So if this is a trade, you may want to look to book some profits here, make at least some of those paper profits real. I certainly wouldn't short this stock. It's too strong. And I would not initiate a new trade. It's come too far. It's a momentum trade right now. If you're very good at stopping out quickly and booking profits quickly, new daily high. But it's not a high beta name, so it's not even worth a momentum trade. Futures keep declining this morning. Should be another. Oh, they're declining? Let's take a look. Well, I wouldn't say they're declining. They're holding support. The question is how do they respond to the jobs numbers this morning? You know, do they hold or do they fade? And that's the big question. And if it's a horrible report and the markets are poised to drop, you know, does the Fed come to the rescue on their white horse again? So we'll see. Let's go to that other. We'll make this the last symbol. Tell. Tellurian, another energy play. This has got all the earmarks of a short covering rally. Beautiful rally here. But it looks like a reaction to this major drop. What a consolidation. Interesting chart. Very cyclical. Would I go buying it here? Probably not. You have a lot of resistance right above at $2 per share. We're at 160 on a percentage basis. That's a lot of money. We have a reversal week here. And again, resistance right at that $2 per share mark. So I don't think I'd be a buyer of the shares yet anyway. If we pull back and we put in a higher low and that sets the stage for a move higher, that would be interesting. But not here right now. I mean, we've come a long way rapidly. I mean, we hit a low of 66 cents. We've more than doubled in the past couple of weeks. So I would not be a buyer here. And with that, folks, I'm going to ask you to please have a profitable trading day. Be safe. And hit the like button if you would. And please join me tonight, 6 p.m. Eastern Standard Time on Thursday Night Stock Charts Live. Love to have you. And everybody have a profitable trading day. And I'll talk to you soon. Be well.